Hey, what's up, traders? First of all, my apologies for the lack of content this month. I just got married. I don't like wearing jewelry, so I got a tattoo instead. So it's been a really hectic month. Jade and I have been together for about 13 or 14 years now, so it was about time. She's been along for the ride from when I was a broke musician and three-time university dropout to successful trader. Pretty soon we're going to Kuala on our honeymoon, which is a big step up from where we used to go when we first started seeing each other, let me tell you. But anyway, before we go on our trip, I wanted to get a video out, and I thought I'd talk about something that happened to me while I was away for my wedding, where a stock I was holding got put onto a trading halt and then a trading suspension, and now I have about $4,000 locked up in a stock that is untradeable. And I want to talk about that experience, what's going on with that, and just sort of draw attention to another one of the hidden risks in trading that doesn't really get talked about. This video is taken from within my real test strategies course, where I share the code to some of the systems I show you in this video, if you're interested. None of the material in this video is financial advice. I'm experienced in managing my own finances, but I'm not qualified to give anyone advice on what to buy or sell. You should always do your own research and due diligence before engaging in trading or investing. And please seek professional guidance if you need it. All right, so I've got an interesting reflection for you guys today. I just ran my orders for the weekly trends system on the ASX, and I found out one of my positions is in an indefinite trading suspension. My capital on this West African Resources is frozen until the ASX complete a compliance audit of the company. It's quite complicated. It's hard to explain exactly what happened here with all the jargon, but essentially what has happened is this company requested a trading halt to make an announcement about their local government requesting to buy an extra 35% of the company. And because West African Resources didn't lodge that announcement by the deadline of 1st September, the trading halt converted into a suspension. So a trading halt is normally a few days maximum. So you can usually react to a trading halt after a couple of days. But if the company fails to release the required info that caused the trading halt, it goes into suspension. I cannot sell, buy, or adjust any of these positions until this is reinstated into trading, and there's nothing I can do about it. There was no announcement prior. There was no indication that this was coming. It just happened. This is the first time I've been caught in a trading suspension like this. I've heard of it happening, but this is the first time it's happened to me. Thankfully, it happened on a $4,000 position instead of one of my other momentum systems that hold $30,000, $20,000. That would make me feel a little bit stressed, to be honest. This is just a minor inconvenience at this stage, but it just goes to show there are hidden risks in trading that we need to be aware of and mitigate. Now, a suspension would almost never happen on a large cap stock. This system trades the ASX 100, the top 100 companies in Australia. It's basically never going to happen, or it would be a black swan event if one of these stocks delisted or suddenly went into a suspension that was indefinite. That's very unlikely. So that's why I have more capital allocated to this system. My trend system, on the other hand, does gravitate towards some of these lower cap stocks, penny stocks and resource stocks, gold mining stocks, and that's part of its edge. But anyway, what can we do about this? Basically nothing. I just have to wait this out. And the point of this video is to make you guys aware of this potentiality. If it's something that really, really concerns you, basically you just need to have higher liquidity filters on your system. Don't trade penny stocks. This is way more likely to happen with penny stocks and resource stocks, particularly West African resource stocks. I mean, I don't want to be prejudiced or anything like that, but I think it's safe to say that West African mining companies don't exactly have the best reputation when it comes to their compliance with international regulations and things like that. So, maybe I deserve this for buying this stock. But again, I'm a systematic trader. What was I supposed to do? Was I supposed to ignore this signal? There's no way I could have seen this coming. In hindsight, yeah, there's plenty of things we could rationalize that made this not so surprising. But what am I supposed to do? Go through and delete all these energy and mining companies out of my system and introduce curve fitting and things like that? There's not much I can do about it. What I can do, and what I should be doing, and this is a new habit I'm going to get into, is using something like market index. to track companies with alerts. I didn't even know about the trading halt. Self-Wealth did not send me any notifications about the trading halt. And because this is an end of week system, I don't check the charts and I don't check the signals until the end of the week. I don't monitor every position I hold every single day of every week. I do check nearly every day, but I don't go into each company. It's just too time consuming. But obviously now I'm going to create a new habit of adding any companies that are in my long-term hold. So the ASX trend system and momentum systems hold stocks for weeks on end. For my mean reversion system that holds till the end of 1 week, I probably won't bother with this, or any system that trades that only holds positions for a few days at a time. I wouldn't bother with this, but for end of week systems, trend systems that can hold for months on end, this is probably going to be an important new part of my routine. And what I plan to do here is add every position in my long-term portfolios to this free service, marketindex.com, and you can turn on notifications. And if your broker doesn't send you notifications about company announcements, this free service will. And this way I would have at least been notified of this company's trading halts, and I would have at least been aware of this sooner. I don't think there's anything I still could have done about this, because after the trading halt on the 28th of August, the stock didn't trade until the 1st of September, where the trading halt would have ended. It instead went into suspension, and that's indefinite. I was reading about it. A trading suspension. I asked ChatGPT, said, here is the announcement. Does this mean I'm fucked? And it said, I've read the announcement you've uploaded. Here's what it means. Are you fucked? Not necessarily, but your liquidity is frozen until reinstatement. If negotiations fail or disclosures drag out, suspension can last indefinitely. That's nice to hear. And in worst cases, long suspensions precede delisting. And the icing on the cake, we won't know the market value until trading resumes, and it could gap up or down sharply depending on the terms of the deal. So anyway, that's all to say, if you trade the ASX in your whole positions long term, if you haven't already, and hopefully you have and you're a smarter trader than me, get into a habit of building watch lists and notifications to be notified of company announcements. Interactive brokers email me every announcement, so I get that for my US stocks, but for the ASX, Self-Wealth are basically useless for notifications. And so this is the only free resource I could find that allows you to build a watch list and set alerts. So let me show you what I would do here. I've got ASB on here as well. Actually, I'm selling that next week. So ASK would be next. Let's throw that on the watch list and hit the bell notification. And if you want to, you can actually select sensitive only. That'll avoid spam from these companies as well, especially if you have a lot of them. So anyway, just a little tip out there. You're not alone. We all make mistakes. I don't really know if this was a mistake. It took me a little too long to notice this happened, because one of the other problems is Realtest doesn't tell you about this. So when I generated my orders for last week and the week before, I was getting married first of all, so I wasn't really paying as close attention as I probably should have to my orders. But when I generated my orders for the end of week trend system, I didn't get a buy order for this stock, smp.au. It says I entered on the 1st of the 9th. I actually didn't enter that. I didn't get an order for that on that weekend because the trading trading suspension hadn't gone into effect until that morning. And so Realtest didn't notify me of it. That's not its job either. So that's not surprising there. But now the system thinks I'm holding this new stock, but I wasn't able to sell West African resources. It says I exited on the 27th, which was a Thursday or a Wednesday. My system only trades end of week, so that's not possible. I didn't exit on the 27th. But the data for this stock stopped trading on the 27th. Realtest doesn't know that I didn't sell it then, and so it's put me into this stock. And that's when I realized today I was just doing an audit of all my systems to make sure my symbols match. And I got to this last one here, and I was like, what the hell is this? And then I had to look into why WAF was still on my list, and that's how I figured all this out. So partly my fault for not being on the ball and keeping watch lists and notifications going on this one, but also, even had I been notified of this trading halt and suspension, there's nothing I could have done about it anyway. So this doesn't change anything. I just would have been aware of it sooner, which as a trader, professional trader, is obviously, that's the goal. We don't want to be surprised by things like this 2 weeks after the fact. So anyway, I hope you find this helpful. I'll leave a link to this market index website below. And yeah, for you Aussie traders, get into a habit of doing this. At least you'll have your finger on the pulse if your broker doesn't send you notifications of this stuff. And if you're an American trader, Interactive Brokers sends out great email notifications for anything related to this sort of thing. So if you use them, you're fine. I'm sure other American brokers are on the ball with this too. The ASX is very archaic. Because we're such a small country, there's no incentive for them to innovate, and they are very old school. Everything is in PDFs, and it's all very analog compared to the American markets, which are high-speed, digital, state-of-the-art, relatively speaking, to the ASX. So if you're American, you probably don't need to worry about this as much. You'll find out about this stuff way easier. For Australian traders, we have to go out of our way to keep track of this stuff. I guess we'll see what happens with this stock. With any luck, it'll get out of a trading halt soon and I can sell it. And then I will just replace it with this symbol no matter where it's trading. I have a rule. If I'm in a stock I'm not meant to be in, I immediately exit at market regardless of the cost. I just get out. Don't think about it. Don't get fancy with it. Don't try to scale out and minimize the damage. Just get out. And that's what I was about to do with this stock till I saw the trading halt. But on the flip side, if I'm supposed to be in a stock, especially for a long-term system like this, then I'll just get into it. No matter what the price is, if it's moved away from my entry price, whatever, I'll just get into it so my portfolio matches my testing software and signal generation. Now, if you're trading a really big account, you can get creative with the entries and maybe split it up 50% per week or 20% per week until you scale into the position so you don't have so much price entry risk and you sort of dollar cost average into the position. For me, on this particular account, I would just buy 4 or 5 grand worth of this symbol when that capital is freed up. If it doesn't get freed up, then I'll just treat it as non-capital and I'll buy an 11th position and just trade those other 10 positions that are actively trading as my portfolio and ignore West African mining until that's resolved, I guess. Not ideal, but these things happen. If you have any questions, shoot me an email, support@theartoftrading. I can't give financial advice. I'm just giving you my personal experience with this particular situation. Maybe someone else will find it helpful. Again, nothing we can do about it. Even if we knew about it, there's nothing we could do about it. But at least if you get into this habit, you won't have nasty surprises. One other thing you can do if this concerns you is just don't trade low liquidity stocks. I mean, this system trades the all ordinaries. If you don't want this to happen, then you have no choice really other than to maybe trade the S&P ASX 300 would probably be the widest larger cap universe you could go to where this is less likely to happen. Still can happen, but much less likely if you're not trading low cap stocks like this system tends to do. Anyway, shit happens. We're traders. We deal with it. We move on. And these things make great stories later on when you meet other traders and they're sharing war stories. It's just part of the game, unfortunately. It's also worth mentioning that this is another selling point for having multiple strategies in your portfolio. I currently trade 6 different systems, strategies with significant capital behind them. I have other experimental systems, but the core of my investing and trading, the bulk of my money is tied up in 6 different systems, different styles of systems, different portfolio sizing, etc., which insulates me against this sort of thing becoming a catastrophic issue in the future. Again, nothing's certain in trading. You can't avoid all the risk, but we can mitigate it. Look, just a couple of things I want to mention before I wrap up. The purpose of this exercise is not to interpret these company announcements as trading signals and use discretion to determine whether or not this is good or bad for the price of the stock. As systematic traders, that's not our goal. That's not our job. Our job is to just trade the system. But we do want to keep our finger on the pulse of announcements that affect the tradability of the stock, such as trading halts. Can't do anything about them, but obviously want to know about them. But also upcoming delistings, so you can get out of the stock before that happens. Mergers, acquisitions, and so on. What we don't want to do is look at things like this. We don't want to come to our watch list and look at the price sensitive announcements and see something like completes human factors study for the FDA and open this up and start reading through this and deciding whether or not it's still a good idea to hold the stock. If you're a discretionary trader using fundamental analysis, of course, you may want to do that. But as systematic traders, did you backtest this? If you didn't, don't trade that way. It's very tempting to bring this up and start looking through these announcements. What we want to look for is this stuff. I also want to mention that this is just a hidden risk in trading that we can't avoid. It's like short selling. You know, some people who run short selling systems experience situations where a stock will gap up, a stock they're holding a short on will gap up over 100%. That's extremely rare, but it's not impossible. It does happen, and it does cause big losses on a short selling system, but there's no way around it. The system may still be worth trading. This system I'm trading is still worth trading, even though this can happen. I just need to be aware that it can happen and account for that. If that $4,000 that I just got tied up in this thing made me feel really uncomfortable, that would be a sign to me that I need to adjust my system to expand the number of stocks that I'm holding so that each position has a lower allocation of my capital, or I simply need to allocate less money to that system overall. I watched a great video recently, interview with Cesar Alvarez. He's a systematic trader, has been trading for many years, and he talks about this. So I'll play a quick clip from this interview. Go and check out the interview if you are interested in this stuff, because Cesar does a great job of explaining this.
One evening, when I kind of downloaded all my trades and looked to see what happened, all of a sudden, I noticed it's like, oh my God, my shorting account really got hit hard. What happened? And when I looked, it was like, oh, this stock was up 110%, and it was a biotech stock. So the problem with biotech stocks is, well, the good and the bad biotech stocks is they can go up a lot or they can go down a lot. And I've done testing to see whether it's better to take them in or out. And overall, it's better to keep them in as long as you can deal with these 100% losses that happen every now and then. So I had one of these, and I froze. And it's like, oh my God, what am I? It's like, I can't get out now. It's like, this is up. It's got to, 100%. This has got to go down tomorrow. And of course, it doesn't. It goes up. But what I realized was my position sizing was too big. I realized it's like, wait a second, 100% can happen. I need to reduce my position sizing small enough such that a 100% jump in a stock does not freeze me.
Anyway, that'll do it for this video, guys. I'll try and increase the video quality going forward. I have some cameras I need to set up. This is just my Android phone at the moment. But I hope you enjoy. I hope you found it interesting, and I'll speak with you in the next one. Good luck with your trading. I mean that sincerely. We have a great audience here, and I love to hear your stories. So let me know down below how you'd handle this or how you've handled this in the past. And yeah, good luck out there, guys. Take care.